heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, TikTok still faces an ousting in the United States after a DC appeals court upholds the divest or ban law. Plus, more VC voices in the new administration as Donald Trump selects venture capitalist David Sachs to serve as his AI and crypto czar. And HPE reaches a record high after posting earnings. We talk AI servers with the company's CEO, but first, we check in on the markets and other record highs than just HPE. We have the Nasdaq 100 at a new record, up 0.7%. The macro picture being that of a resilient jobs market. And even though there's still some inflationary pressure, the market almost pricing in some sort of rate cut for later this month coming from the Fed. So we see stocks move higher. The S&P at a new record too, 57th that we'd see, up almost 30% year to date. In terms of points contributors, you're looking at Broadcom doing well, also Meta as well, which we'll dig into in a moment. And that's all because of TikTok's Chinese parent company, ByteDance, still facing that ban here in the United States if it doesn't meet the January 19th deadline to divest TikTok. This after a federal appeals court just came out with its decision to uphold the ban. Bloomberg's Alexandra Levine joins us now, who covers all things social, all things TikTok, and you aren't surprised ultimately by this ruling.
This is what we expected, but it still is very surprising in the sense that we've never seen this happen in the United States before. So if this ban comes to pass late in January, it will be the first time that any foreign-owned social media app has ever been banned in this country. And again, it's not just any social media app. This is a social media app used by more than half the American population.
And backed by some very powerful people, potentially close to the next administration, venture capitalists, PE funds. But what's interesting is what's effect this is having on the company itself.
Yeah, inside the company, I think the sentiment has been fascinating. It's sort of been twofold. I think there's a lot of folks inside the company who had been more actually scared the first time that this happened with Trump's first administration, when Trump was originally the one who tried to ban it back in 2020, unsuccessfully. So that then, when all of this has been transpiring this year, you had a lot of people who were like, we've seen this movie before. This is sort of Boy Who Cried Wolf. They didn't actually believe it would come to this. But I think the court upholding the legitimacy of the law today could well change people's tune.
Just for our audience, we have a little live fire drill going on here in Lexington Avenue, New York. So bear with us when we have some of these particular announcements coming through the camera. Alexandra Levine, we thank you so much on all things TikTok. Let's go to Bloomberg intelligence analyst Matthew Schettenhelm for more, who I'm pleased to say isn't sat in New York, so we won't get the sort of interference from a noise perspective. Matthew, from the legal perspective here, what was the ruling from the judges? Ultimately, they think that national security out-trumps, to pardon the pun, what's happening from a freedom of speech perspective.
That's exactly right, Caroline. Looking quickly at the 65-page opinion, this looks like a sweeping loss for TikTok, where the court completely rejected its First Amendment argument and said that national security concerns trump all of those complaints. The court said that this fails both intermediate scrutiny and even strict scrutiny, which almost never works. But the court said, look, the government's interest in national security trumps the First Amendment concerns, no matter what the test is. This is a tough loss for TikTok, and I think it's going to be difficult for TikTok to overturn it.
To that point, you had, a 70% chance that TikTok would lose on this particular DC court. Their only inning here now is to go to the Supreme Court. What are your probabilities on that, or is it too early to tell?
No, I think that is going to be the option. In theory, they could ask for rehearing at this appeals court, but this decision leaves little hope of that. So I think you're right that the next move is an emergency petition to the Supreme Court to say, justices, hit pause on this January 19th date. This is an important First Amendment case. As Alexandra said, this is sort of novel in American law. And so trying to entice the justices to at least look at it before the date comes up. The thing is, it's difficult to do that, though. It takes 5 justices to vote in support of that. And with this sweeping decision, 2 of the 3 judges who wrote this decision are Republican appointed. One of them is President Trump appointed. And this Supreme Court tends to agree with those judges. I think there's a real possibility the Supreme Court looks at this and says, you know what, the D.C. Circuit got it right. We might not even need to take this up. So there's a chance of that they hit pause and the Supreme Court has to rule on it. But there's also, I think, a better chance the Supreme Court says, no, they got it right. This case is over. Let the ban take effect.
What then, legally speaking, does TikTok do? What does ByteDance do?
Yes. So the question then is, will it do a divestiture? You know, the law gives it a path around an effective ban by selling the service to someone who's not located in China. The problem is that China has said it won't approve a sale of the algorithm. So TikTok's in a bit of a tough spot in that sense. The other big question is, what will President Trump do with this? Will he enforce this law? The enforcement mechanism is the Department of Justice here, and President Trump, in theory, could direct his Department of Justice to say, don't worry about enforcing that one. That would be highly unusual. And the companies that host TikTok would be taking enormous risk. He wouldn't change his mind, but it's at least a possibility.
We don't rule out anything, of course, for the future. And I am interested as to whether you know from behind the scenes, ultimately, what it could look like if they did divest, and legally speaking, how that might have to ultimately look.
Yeah, I mean, there's a big question. I think the biggest question around the divestiture is whether TikTok would, or potential buyers would, look at a transaction that doesn't involve the algorithm. And if China won't approve a sale of the algorithm, maybe you're looking at selling, you know, just the users and the platform, but without the secret sauce that makes it work. And so I think you could see the company exploring those sorts of alternatives in the near term.
We will await to see whether indeed it does get pushed onto the Supreme Court. But can you give us a feeling of timing here, Matthew? January the 19th feels incredibly close now. It is one day before the new administration is sworn in. Here we go with the fire alarms again. But what are you thinking in terms of just an extension past January 19th?
Exactly. So what I expect we'll see here in maybe today, maybe in a matter of days, is this emergency petition to the Supreme Court asking the justices to hit pause on that January 19th date. And I think the Supreme Court will take that petition. It will ask for briefs on that leading into January. And then the Supreme Court is either going to say yes or no, probably in mid-January, about whether it will grant this case, take the case, and hit pause on that January 19th date. So that's where the legal action is likely to be in this pushing the justices to hit pause on that January 19th date. And as I said, I kind of think that the justices might say, no, we don't need to step in here. Let's let the law take effect. The D.C. Circuit got it right.
And then it's over to Trump and the new administration. Matthew Shedenholm.
Right.
Fascinating. You called it right this time. We'll check in with you later. Meanwhile, here's another Trump pick. David Sachs as White House AI and crypto czar. Trump posting on Truth Social that the venture capitalist will, quote, guide policy for the administration in artificial intelligence and cryptocurrency, 2 areas critical to the future of American competitiveness. Bloomberg's Katie Roof helps cover all things venture. And once again, we have another venture capitalist, other than, of course, we have who's the deputy, the vice president-elect as well, being one. David Sachs has been close to Trump of late. Can you just tell us how we got here?
Sure, he was a big fundraiser for the presidential campaign, and he's also quite close to J.D. Vance, the vice president-elect. David Sachs was hosting fundraisers and also getting other Silicon Valley supporters to come on board and support Trump. So it's not surprising that there's some sort of role or partnership here.
And indeed, not a full at-the-seat role in politics that means he has to step away from Craft Ventures. We know that he has sort of ultimately focused there because he's got a key man risk. His venture capital history is extraordinary. He's been in the angel rounds of Facebook, now Meta, in Palantir, in some of the most successful exits that we've seen coming out of Silicon Valley. He built his own company that was exited to Microsoft, earning him $1.2 billion, well, earning at least the sale price of $1.2 billion. How intimately is he interweaved within AI and crypto? Because he has BitGo, Bitwise, Lightning Labs, for example, within his portfolio.
Sure, there's already questions where people are asking, does he have a conflict of interest here? But given that this is a less formal role, it's unclear if there's any roadblocks there. He's, certainly, very much a part of the ecosystem. He has a popular all-in podcast that many people in Silicon Valley and beyond listen to, where he airs controversial opinions. But I would see this as a sign of deregulation. He is definitely very tech-friendly, with crypto and AI. He is going to want to make moves to prevent anything that is obstructing the growth of these technology companies.
Katie Roof, we thank you. All in on the all-in announcement. Meanwhile, coming up, HPE reported a better than expected fourth quarter. AI driving strong sales for its servers. We'll speak with the CEO, Antonio Neri. That's next. This is Bloomberg Technology. HPE reporting strong fourth quarter results, and we're seeing shares at a new record high. It's all around the sales strength that we're seeing for servers to power AI workloads. How resilient is that? Let's ask Antonio Neri, HPE CEO. So what's interesting about the AI server business was that it's still growing fast, but has it cooled sequentially? Are you feeling confident about the purchases here?
Well, good morning, Carol, and thank you for having me today. We had an exceptional quarter, and obviously one of the flagship elements of that quarter was AI. But I have to say it was more than AI. It was also a hybrid cloud business performing exceptionally well. And the server in general, because ultimately we have growth both on the traditional CPU and obviously on the AI side. But on the AI, demand continued to be very, very strong. As of today, we have more than $3.5 billion in backlog. That shows the momentum that's there in the market. Now we're seeing a significant uptick in the pipeline in enterprise AI. But in total, we have a pipeline that's a multiple of the backlog. So as we go into 2025, obviously there is a transition to the direct liquid-cooled set of technologies with Blackwell and Grace Blackwell. And as you know, 2 months ago, we announced a new architecture, which is 100% fanless direct liquid cooling, is the industry first. And more than one third of that $3.5 billion backlog is already on Blackwell. So we expect continued growth as we go into 25.
How are those Blackwell shipments looking? How certain?
Well, definitely is all very consistent to what we have seen. The number of customers continue to grow. The demand across 4 different segments continue to be very solid. When I think about AI, I think about 4 distinct segments. I call it the model builders and the hyperscalers. Then the tier 2, tier 3 service providers, the sovereign, which is growing very rapidly in terms of interest, and the sales cycles are a little bit longer there, but you're talking about large-scale deployment. And we are in the process to building in the UK, the UK Bristol AI Cloud, and in Japan, the AI ST. And then the enterprise, which obviously the order value is significantly lower, but the number of transactions is significantly higher.
But the supply side has been the issue with Blackwell in particular. How swiftly are those shipments arriving? How on track do you now feel it is?
Yeah, I will say, the supply will come in due time because of the transition that Jensen and team are driving. I will not say it's problematic. It's just the transition in early part of 2025. Today, we continue to ship, H100s and the H200s. But as I said earlier, Caroline, we already have more than one third of that, more than $3.5 billion already in Blackwell. And a lot of that has to do with companies that lead with that technology because they want to get better performance, better energy density, and ultimately lower the cost per training.
You were really interesting articulating just the breadth of demand coming from there, mentioning sovereign as well as enterprise, for example. How resilient is that demand? What's interesting about your backlog, which you say is very resilient and strong, but there was a $700 million debooking. How confident are you in some of these purchases, in some of these deals that have been signed?
Yeah, so in our current more than $3.5 billion, we're very, very confident. In Q4, we booked $1.2 billion of new orders. And we decided to book a specific orders because we had specific concerns about the risk associated with that order. And we have very, very strong controls in place. And we felt that because of the risk associated with even the financing side, we felt this was not worth the headache. And honestly, we decided to focus on the number of growing customers we have and allocate the supply to the right customers. So that's why we decided to debook that specific order, Caroline.
You're also doing deals, of course. We are hearing confidence on Juniper Networks acquisition for the early 2025. Is that just going to sail through DOJ, do you expect, with the next administration?
Yeah. Well, first of all, we have received pretty much all the approvals around the world with what I call unconditional support. Basically, it tells you that the rest of the world sees this pro-competitive. And with the DOJ, we have had a very collaborative process throughout the last several months. And we expect the transaction to close in the early part of 2025, which still is within the original timelines we stated when I announced the deal on January 10th, which was end of calendar 2024 or early part of calendar 2025. And so nothing gives me pause that will not be the case. And then in addition, for the United States, this is good, not just pro-competitive, but also for U.S. national security, because ultimately the combination of Juniper and HP provides a better ability for us to compete outside the United States, particularly when you have Chinese competitors around the globe. And remember, Carol, that for the United States, we provide the largest supercomputers that are doing also AI, and that requires a lot of networking. And today, Hewlett-Packard Enterprise owns 7 of the top 10 supercomputers. Number 1, number 2, and number 3 are HP systems.
Well, being reflected in a new record high on the share price, and Morgan Stanley sounding very upbeat about eventually what Juniper does in terms of accretion. We thank you, Antonio Neri, who's the HPE CEO today. Meanwhile, coming up, US hiring picked up in November, adding 227,000 jobs. We discuss the resilience in the tech sector, what it means in terms of impact. Meanwhile, just reflecting on a couple of stories out of France today. Ubisoft up 12, let's call it 13%. This as we get an articulation of potentially what some sort of management buyout could be looking like. The Guillemot family holding talks with Tencent, as has been reported by Reuters and other investors. We're up 13% there, and boy, are we down on Atos. Look, we're basically nil point, 98% lower that you're seeing for a price point on Atos stock. This as we are expecting the subscription price of its recent rights offering sinking, ultimately coming to a very low number. Stocking trading, as you see, at 0. This is Bloomberg Technology. Time now for Talking Tech. First up, NASA hasn't landed on the moon in 50 years. The next one now won't happen until at least 2027. The newly announced delays come as engineers race to fix a crucial safety issue related to hardware. Now, the agency also announced it will delay a moon flyby until 2026. The scheduling setbacks are the latest in the program plagued by spacecraft cost overruns and technical hurdles. Meanwhile, Uber launching its first robo-taxi service in Abu Dhabi, making good on a partnership struck with Chinese vehicle partner WeRide. Customers are able to request autonomous vehicles around key tourist areas in the UAE, and Uber expects to fully launch its driverless service in 2025. And the dramatic events in South Korea this week has catapulted a year-old movie to the top of the Netflix charts. The film 12/12 The Day became the #1 Korean film streamed since South Korean President Yoon Suk-yeol stunned the nation by imposing martial law. The 2023 blockbuster depicts the events surrounding a coup in 1979. Now, there have been some big market moves today. and in large part, it's on the back of US jobs data. November payrolls coming in strong, 227,000 added, but we want to get the tech perspective. Sarah Franklin, Lattice CEO, joins us now. And Sarah, we are fascinated by ultimately how resilient this US jobs data looks and how that resilience is potentially being borne out in tech, is it?
So what you're saying is true. We're seeing this resilience, we're seeing predictability, and we're seeing balance in the data. And we're seeing incredible time in tech, not just with the jobs report and the 227,000 jobs, but also with a new entrant to the labor force with digital labor.
Let's just talk about how augmenting digital labor is or not. It's interesting, your alma mater, Salesforce, coming out saying they're going to be reallocating 1,000 workers to be going out and selling their agent force. How much are we having to see people work in tandem with the growth of generative AI?
You're definitely seeing this new world where AI is working together with humans and where people are successful working together with AI technology. And every CEO is looking to the future and saying, how do I reshape my workforce? How do I bring AI in to help us be more productive, more efficient from the public to the private sector?
Okay, so where are some of the worries that are still overhanging in CEOs? It does seem to be this disconnect that we've got all of these generative AI tools fit for use to buoy our productivity. But actually, a lot of the workforce are either scared to use it because they think they'll be deemed lazy or indeed just aren't getting the training. Is that starting to change?
So AI literacy and AI proficiency are more important than ever. And yes, every CEO is saying, how do I bring my workforce along, my people along, to skill them, to train them, to make them proficient, not just literate, but proficient in these technologies. It's critical for every job function, whether you're doing customer service, sales, accounting, data operations. AI is a part of everyone's jobs, and so the skilling and the training is hand in hand with the implementation of the technology.
I ask it, I'm sure each time you're on, but I ask it again, is it affecting the number of people that companies can have?
So there's definitely efficiency gains that we'll see, and companies are looking to have a way to scale their workforce in ways that meets their needs. And so we're going to see shifts in the labor, and jobs will change. Some jobs will be created, some jobs may go away, but the future is one where AI and digital labor is here. The reports coming out of Deloitte say that a quarter of enterprises next year are going to be deploying digital agents. And so it's important that everybody learn this technology, and every CEO is looking how they shape their workforce with both people and with the new digital labor entrants.
Lattice, #1 AI-powered people platform. Someone to listen to, Sarah Franklin. Thank you so much, Lattice CEO there on jobs in tandem with AI. Meanwhile, coming up, data management company Rubrik. It beats earnings estimates. CEO Bipul Sinha is going to be joining us. What's driving that demand? This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York, and in New York, markets are trading in a new record high. Nasdaq 100 continues to grind higher, up 3% over the course of the last 5 trading days. Today, the moon music continues to the upside because of jobs data looking resilient, but not too hot to cause unnerve to any fulfilling of a Fed rate cut outlook. We're currently up, as you see, 3.1% on the 5 days. Where has crypto gone over the last 5 days? It has been a volatile ride, at one point eclipsing $103,000. We're still up 1.4% for the last 5 trading days. We're currently back at 99,178, as we call it, just inching higher on the day. We're basically stabilizing after what had been a bit of a pullback after reaching that psychologically important number. Let's dig into that number and into what else is riding behind it. Isabel Lee joins us. What's interesting, of course, we get the new crypto czar, crypto and AI czar, David Sachs, coming in. That's going to be yet more positive moon music around crypto. It was the SEC announcement. What else caught your attention?
that everything is aligning. The stars are aligning for the crypto space. Everything is just, nothing can beat it. It's like the perfect holiday for them. We have Bitcoin soaring, but we have bearish wagers actually taking up. Of course, investors are taking back their profits. I mean, who wouldn't, especially if you put in a lot of bet. But I want to bring your attention to the Bitcoin ETF. BlackRock's IBIT is the 5th most active ETF option underlying. When it approved options just less than a month ago, it now is the 5th most active according to ASIM. So that's really impressive because it's only behind the biggest ETFs from SPY to QQQ to TLT. And it's the most successful ETF so far. It officially hit 50 billion. So you really see institutional demand going into that. We have Wall Street investors are not scared anymore of Bitcoin ETFs.
Well, they're not scared of really quite leveraged plays as well. People getting into MicroStrategy, playing the volatility around it. We dug into that. Where are we starting to see other areas of growth from institutional and retail?
So that's what we're not seeing yet for the altcoin ETF. So we have Ether ETF, it debuted mid this year, and it really saw kind of lame inflows. But when Trump was elected as president, that's when it saw massive inflows. So now we have a lot of pending ETFs from XRP to Solana, 4th and 5th largest altcoins. So it remains to be seen whether we will see inflows for them. But judging by Ether, it's not such a promising start. But with the Trump presidency, and to your point, David Sachs and the new SEC pick, maybe investors will pile into those ETFs.
And what's interesting is, of course, this is becoming so much more of a macro picture now. This is an asset class that people do feel that they almost ought to have exposure to, not should do as a risky propensity.
At least for Bitcoin, because if you talk to my mother or anyone who is like Gen Z or whatever label of generation you have, digital gold they get, finite supply they get, inflation hedge they get, but how do you sell Ether, XRP, Solana? So those are a bit more complex, but you're right, Bitcoin at least now is becoming a little bit more mainstream. It's easier to accept, easier to digest. BlackRock Investment Institute, in fact, in their 2025 outlook, included Bitcoin for the first time. They said it's a great diversifier because of the erratic stock-bond relationship. So it's getting there. Conversation is moving into crypto for now.
I literally was at the station yesterday and 2 police officers were telling each other how they were in Bitcoin and how it was going to go higher. So there we have it. Everyone's talking. Isabel Lee, thank you so much on all things crypto. Let's turn from crypto to data security now, because data security software firm Rubrik's come out with its numbers, and the company beat earnings expectations, boosted its full-year revenue guidance. You can see the market reaction. Extraordinary, up 34% on the day. And of course, that's a record high. Let's talk to Rubrik's CEO and co-founder, Bipul Sinha. I mean, congrats on the numbers. Analysts really liking what you've been able to show in terms of cross-selling here. That many saying, look, you're the only game in town when it comes to cyber and data security. How are you seeing in your clients pick up?
Thanks, Caroline. We had another outstanding quarter, and we are very pleased to not only have a strong growth at the scale, top line, but we also improved the profitability and generated free cash flow. So exciting time for us. What is fueling Rubrik's demand is really this realization that folks have spent a lot of dollars in stopping attacks across network, endpoint, cloud, but you can't stop the unstoppable. You need to have a resilience strategy to ensure that when the inevitable breach happens, you can still run your business. The kids can go to school because the schools are open, hospitals can admit patients. And that's what we are focused on. And we are helping businesses make sure they are continuing operation even when they're confronted with cyber attack. And that's what is fueling our demand.
It's interesting today, a really well-read story on Bloomberg by Ryan Gallagher is all about ransomware gangs really targeting not just really big institutions, but smaller, medium-sized enterprises. And when you got ransomware attacks up 70% in 2023, what is the outlook for everyone having to adopt some sort of protection here, Rubrik?
Ransomware continues to be a huge problem because that's a monetizable way for cyber gangs and criminals to actually make use of cyber attack. So the issue is, like, who are they targeting? And they are targeting the weakest link, which is our local governments, local schools. They are targeting the hospitals and other healthcare institutions because these organizations are not protected properly. If you just think about healthcare, there is so much sensitive data in healthcare, 3 times more sensitive data than average enterprise. And the amount of digital transformation that is happening in the healthcare space to reduce the cost of healthcare, to deliver better services, it's creating more surface area of attack. Yeah. And as a result, we are focused on really protecting the unprotected.
We're just going to break some news. Hold on for a minute, Bipul, but we have news out of our own Mark Gurman regarding Apple with us Breaking news that Apple is preparing, in fact, to finally bring one of its most ambitious projects to market, basically the cellular modem chips that we've been hearing about that's going to replace components for its partner, but also basically let's call it its adversary, Qualcomm. Qualcomm off by a percentage point, Apple up 0.3%, more than half a decade, more than 5 years. They've really been focused on this in-house modem system, and it's going to be debuting next spring, according to people familiar. We will bring you more on that story, but let's just get back to Bipul of Rubrik, because we were just talking about how the expansionary nature of these attacks, ransomware attacks, unfortunately. Can you paint the picture of what it looks like going into a next administration, 2025? Are we likely to see in any way the narrative there change around data protection, data security, cybersecurity?
The next administration will be America First administration, and that will actually spur more industrial espionage, more cyber warfare, more cyber activities, both insider attack, cyber attack. And so we believe that as we are digitizing faster, and the next administration will be quite business-focused administration, so we believe that the outlook for cybersecurity is obviously grim, and we are ready and prepared to help businesses protect themselves as they expand internationally, as they expand their business, as they create more digital transformation. Our goal is to help every business confidently transform themselves digitally without worrying about how they can keep their services up and running.
We haven't mentioned Gen AI yet. How much are you having to reference it to your clients?
Look, Gen AI is a big driver to our business because Gen AI applications are actually data hungry, and they are pulling data from all the nooks and crannies of business applications into a centralized place and ensuring that that data doesn't fall into the wrong hand who uses the Gen AI applications. You don't want salespeople in a hospital to have access to the patient record. And this is where we are focused on really delivering data security, ensuring that the Gen AI applications are trusted and responsible.
Rubrik soaring 34% on the back of your numbers today. Great to have some time with you, Bipul Sinha, Rubrik CEO. Now, more earnings coming up. DocuSign CEO Alan Thygesen is going to be joining us. That's next after the firm also beats expectations on its earnings. This is Bloomberg Technology. Electronic signature software company DocuSign, its third quarter numbers really did beat expectations. The company is boosting its revenue forecast for the full year as well. We're up again 25% on this particular company. Let's have a talk about it with the DocuSign CEO, Alan Thygesen, who ultimately is displaying what seems to be a growth here that is not just coming from early contract renewal, but also new products that you're offering. How much are they to be said for the galvanization and growth?
Yeah, well, first of all, it was a very positive quarter for us. I think we beat on all the metrics and were able to raise for the full year. And that was really a reflection of strength across the board. So in our existing business, the signature business everyone knows well, we significantly improved retention and reduced churn. We've grown our channels from being predominantly direct sales to now also having a very strong digital channel and building out our partner channel. And then, as you mentioned, our new products, which we launched at the end of May to a limited distribution to the mid-sized customers in North America, started contributing in this quarter as well. So it's still early, but I think DocuSign is on a very positive trajectory of rejuvenation.
Rejuvenation. Let's talk about that, because the acceleration in billings are basically coming from a very depressed level. And everyone is saying, look, this is really encouraging. But when I look at Piper Sandler in particular, they're sort of waiting for really the new solutions, the new offerings to make meaningful difference to your revenue. When will that happen? Will it happen?
Yeah, well, it's a journey, and we're working on that. Our goal is to return to double-digit growth. We're not putting a particular timeline on that, but as we roll out these new products across more geographies and segments. We just launched around the world here about a month ago and just started shipping to enterprise rollouts and departmental level rollouts in enterprises. So we're still adding customer segments and geographies, and as that impacts more and more of our book, we can drive more growth. And of course, any continued improvement in our core business also helps. And so you're starting to see some early signs of that. We got more work to do, but it's very encouraging, the progress that we're making.
You've got some more convincing to do, because when I'm looking at the Bloomberg terminal, it points out what the revenue expectations are for your business going out to 2027. I'm afraid we're staying in single digits for all of those expectations out as far as we go. What do you think really catalyzes back to, I'm not saying the 40% increase in revenue we used to be having in 2021-22, but at least the double digit? What gets you there, Alan?
Yeah, I think we get there through the combination of continued improvement and retention in our core, and then the full rollout and adoption of our new product suite. We call it Intelligent Agreement Management. It's a much broader value proposition than DocuSign has had historically. It's a true C-suite sell. It's across the entire enterprise. And we have, I think, tremendous greenfield opportunity, are in the best position to really help transform how agreements get done. That's our opportunity. As we execute on that, then we can deliver on that growth opportunity.
You've got about 1 billion users, 1.5 million customers. What sort of numbers do you end up getting to, do you think?
Well, so we already have, as you mentioned, over 1 billion signers. I'm sure we will add more signers, but we got a lot of people who are already used to signing DocuSign documents. And from a customer perspective, we're adding about 10%, growing our customer base 10% year over year, every quarter. But those tend to be smaller customers. We are already present in most large companies in the world. I believe over 85% of the Fortune 500 are already DocuSign customers. So our opportunity is more adding breadth, basically cross-selling and upselling our new broader solutions into clients that are already generally happy customers of DocuSign. So that's a fantastic starting point.
And where is the competition for you? Who do you pit yourself most often up against?
Yeah, historically we've had some competition in the electronic signature space. We're by far the market leader, I think the preferred branded solution, but we have some lower price competition there. I think increasingly as we move into this broader agreement management space, those competitive dynamics change. And as I mentioned, we believe that's mostly open field running, and we're the first to, I think, articulate this broader vision and execute on it. So if we can keep that going, I think we're in a very good position competitively.
And just give us a bird's eye perspective. When you're in 180 countries, where is growing most geographically? How resilient does the US look when we're entering a new administration?
Yeah. Well, the U.S. economy has been the strongest of the major developed markets, and so we're certainly benefiting from that. On the other hand, the U.S. is also the furthest along in the adoption of electronic signature, which still remains the bulk of our revenue, whereas some other major markets, for example, Germany and Japan, are a much earlier state of adopting various forms of electronic contracting. So we have a lot of growth opportunity there. We're growing faster, meaningfully faster outside the U.S. Than we are in the U.S., and I think that will continue to be the case for years to come.
DocuSign CEO Alan Thygesen, it's great having some time with you. Congratulations on the share pop on the numbers. We appreciate your time. Meanwhile, coming up, Elon Musk's AI startup XAI nabs a more than $40 billion valuation. Details next on its fundraise. This is Bloomberg Technology. Meta AI. You using it? Probably, because 600 million people are using it every single month. Meta platforms at a new record high. Also on the back of the TikTok news, of course, that TikTok's ban or divest will continue to January the 19th and maybe gets pushed over to the Supreme Court, but the Washington court upholds it. But also happening with Meta now is the CEO, Mark Zuckerberg, saying in a post on Threads, the company is releasing its Llama 3.3 70 billion text model, saying it performs similarly to previous models. And the CEO is also noting that Meta AI has nearly 600 million monthly active users as it interweaves generative AI across its entire product range. We'll delve into generative AI and the competition there right now, because Elon Musk's xAI has raised $6 billion in new capital, wrapping up a funding round that has been in the works for basically months now. It was said to value the AI startup at about $40 billion. This is all according to a regulatory filing, which indicates the equity financing came from some 97 investors who were not named. Bloomberg's Kurt Wagner has been going through those details. And xAI is more about the generative AI models being built, large language models, and plenty more. What is he using the money for?
Yeah, a big portion of this money is expected to go towards this supercomputer that xAI has been building in Memphis, Tennessee. You may remember, I believe they announced it over the summer, the idea that this would be possibly the largest supercomputer in the world, with tens of thousands of NVIDIA chips all sort of running at the same time. So that's obviously a very expensive project. It's a very ambitious project. And so that sort of explains why Elon Musk not only raised $6 billion here for xAI in the filing that we just saw yesterday, but also $6 billion additional dollars in funding back in May, right? So this is $12 billion that has been raised just in the last 6 months or so.
And we know who previous investors have been. I mean, one of them is now the AI and crypto czar to the next administration. Right. David Sachs has been putting money into xAI and every other Elon Musk business, really. But who else has previously wanted to write checks to this company?
Yeah, we see a similar roster almost every time Elon goes out to raise money. Andreessen Horowitz, Sequoia Capital, Valor Equity. These are the sort of, the continuous or regular investors in Elon's businesses, not just xAI, but also X, formerly Twitter, SpaceX, Tesla, right? So we see the same names kind of crop up every time. We don't know exactly who's in this latest round, but you can bet that it's most likely the same names we see regularly with him.
And what's been so interesting to understand what xAI means for the rest of the businesses, because we have at one point concerns that some of the GPUs, or at least spending that was heading towards Tesla, was being pinched over to xAI. But then you have perhaps how much AI is going to help Tesla's business model, how much it's going to continue to innovate on Grok, for example.
Yeah, this is sort of the thorny world in which Elon operates with all of his businesses, right? Where he tends to borrow resources from one company to help another company. In this case, he's talked about, obviously X and all the posts that are showing up on X as being the data that's powering xAI and the chatbot Grok that they built. He's talked about using xAI with Tesla and maybe even investing in xAI via Tesla. So, his universe, as you know, Caroline, it's just everything kind of blurs together. And so we're seeing this as sort of the AI layer for, I think, a bunch of his companies. And I think the more funding they get, especially from investors who are already invested in the other businesses, you'll see this continue, this kind of connection between xAI and everything else in Musk's empire. And
meanwhile, let's just talk about the ecosystem that surrounds it, because we've had Sam Altman on stage at the DealBook conference this week talking about how he's not too worried or perturbed about Elon Musk hitting in on OpenAI's future success. But what about, we've got Meta just announcing how many people are using their generative AI products across the whole gamut of their product offering. Where are people going at the moment for generative AI offerings more broadly?
Yeah, I mean, I think ChatGPT from OpenAI still sort of is maybe the first thing that comes to mind when people think about this. It's probably the most well-known. But Meta, as you point out, they just had an announcement literally a few minutes ago, 600 million monthly users of their Meta AI bot. Now, they benefit from the fact that they put that bot into Instagram and Facebook and WhatsApp. So they're reaching, billions of people just by putting the product in something that they are already using. But I do think that, we're getting to this place where there's going to be a couple winners or a couple, companies kind of coming out in front. I think ChatGPT, Meta AI, and then Grok obviously is built into X. So those are the three that come to mind for me when I think of these generative AI bots.
Kurt Wagner. Across the space. We appreciate it. And look, let's just dig a little bit more into these models, because the tech industry has kind of been hitting a bit of a wall when it comes to building better generative AI models. Bloomberg's Shirin Ghaffari has been writing about this. Your latest newsletter, Q&AI. What's interesting is Mark Zuckerberg just releases Llama 3.3, and he's, seeing it as the next base model. How have people been hitting up against improvements here, though?
So here's the thing. AI is certainly getting better, but we have to think about the kind of bold bets and predictions that the leaders of these AI companies are making, which is that we are going to reach some kind of all-knowing, very powerful, matching or surpassing human intelligence level AI in the next few years. And so that is the kind of intense race that these companies are going against right now. And that is why there are some kind of missed expectations around the pace of which they'll be able to actually deliver on that.
But Sam Altman this week, just briefly, saying 2025, right?
That's right. And, again, we are seeing progress, but by now some people were hoping, we haven't yet seen a GPT-5 level model. We haven't yet seen the next big model from Anthropic. So that's what sort of the end goal is.
Go read your newsletter. Shireen Ghaffari, thanks for joining us today. That does it for this edition of Bloomberg Technology. Don't forget to check out our podcast. You can find it on the terminal, as well as online on Apple, Spotify, and iHeart.